Sharp EFS Hub. Let's look at SAU USD on 4 hours and potentially looking at the structure for liquidity. There's no liquidity at the moment. Market is not moving, but we also have to look at it based on what the price has done. Look at the potential upswing and where to expect the next price movement. Now, on this structure, we'll be looking at it critically for a while now, and you see that the only invalidation of structure at the upper end is at this level. This is the only place where we have invalidation of strategy. The rest aligns with our strategy. We have here as demand, here as demand, here as demand, break of the demand floor, retest, invalidation of strategy, break of the supply roof, retest, break of the demand floor, retest. So on technical, we're expecting a price return into 2674. Look at 2674. That's case one. At that rate, it makes a decent sense for a gold holder to sell off at that rate, hoping to make some few dollars from that upswing. Then the next strategy we want to look at is the red ascending trend line, slightly elevated. We have here demand floor, break of a demand floor, price return here, break of a supply roof, retest. When price return respected a demand floor, break of a demand floor, retest, supply roof. When price return here, respect of a supply roof because of the previous price action, also at this level. So when price return at this level, also respected the structure within the zone. So sometimes trend line, you have to make a zone for your trend line. But we don't want to keep many messy charts. It is within the zone. So at that level, the price action occurred at the zone. When price return here, it's a buy. Respect what? The broken supply will becomes a demand floor. Demand floor. Buy. Break of the demand floor. On technical, it's telling you 2682 as an extreme sell case. So that is case two. So this our cases are going to form our zone for the next bearish drop. Now we have the last floor, which is also very important to me and the most important price action in this move. I I also like this price action. I also like it. I also like this price action, and price can return here for a potential buy 50. Price can return at 50. The reason I'm saying so is because of the institutional involvement in this level. I'm going to change the color to black so that when we come back, we look at it and demystify, you know, what institutions have done at this level and how that represents the sentiment of buying and selling of the yellow metal in the gold market. Everything you see here represents real life scenario. You may not own a gold, but you can trade gold. That is what we're doing. So what we look here now is we have another institutional involvement here. We have here also support structure, break of the support structure, price cannot retest within the zone because we have the weeks. So if we are to bring our structure down, we are to make a zone out of it. Of course, technically this is a selling zone. So if we take it to that level, that gives you the permission to sell that structure. So this is the zone. So whatever falls short of this will actually be a retest to a broken demand floor. And when price return here respected the structure of demand, and we have here break of a demand floor, price returns here on supply within our zone. So as long as price did not cross the black line, it's trading below supply. So you are looking for sell opportunity. And when price return here again, it's a sell before a break of the demand floor. Sorry, before the break of the supply roof. Now the supply roof is broken and price tapped into area of strong liquidity, which is here a strong supply roof. Here is a strong supply roof. The price action is very strong, and of course, the price cannot escape that level. Price cannot escape this level. It's an area of strong influence. Can't escape it. So look at the price action started from here. Here is the demand floor. Break of a demand floor, retest, retest 2, and final retest 3. And the next 4 hours candle is attempting to break the structure. It's attempting to break the structure. If the structure is broken, that will mean a lot, indicating that price want to tap into this double structure neckline. This is a double structure, a bullish price action, changing price from bearish to bullish. You can see that lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and price changed to higher high, higher low, and the trend changed. And when you look at it in a higher time frame, it looks like a consolidation. But when you come to 4 hours, it's not really consolidation the way you see it. So what we see technically is that the the pair is doing exactly what we want, and at the moment we are going to see how. Okay, now let's continue. So now we have here, so this becomes a very strong area of resistance, and price came on Friday, respected the structure, and came on Tuesday, respected the structure, and Wednesday, respected the structure, and Thursday is trying to invalidate the structure by breaking the structure to print a new high. Most likely, price might be looking at testing 2,683 level. So what we see here is now we came here, we tested break of the supply roof, price start liquidity came down, broke the supply roof, now it becomes break the demand floor, becomes a supply roof, and price sold off, then went on to break on the structure again after this weak rejection at this level, and that weak rejection hits from price forming a strong buy consolidation at this level. There's a strong buy consolidation. You look at it, market will always buy from where it bought before. So this becomes a new trend line and is traceable. We have here demand floor is a new structure that gives birth to that price action. We have here supply roof, invalidation of strategy, price return here to buy, and when you return again broke the structure, price bought here again and came down and so market always try to buy where it's been buying. Most times the strategy is to buy from the break of a previous low. And you can see the structure, here, the structure, and finally we took off from here on the left. And we have double confluence to that. We have a descending trend line. Our current descending trend line breakout and a possible retest yesterday affirms bullish potential for SAE-USD. And when you clone the structure and we bring it down, you also see that the last break and retest was actually what we want to see. We have a descending trend line breakout too at this level, and that descending trend line breakout ultimately brought in the liquidity needed to push SAE further again. At this level, we have another strong break and retest at that level, and as well a breakout from a descending trend. We have here a break of structure, price retest, retest, break of the support floor, price from here, supply roof, supply roof, supply roof, break of a supply roof, price came here, retest, double confluence, and price left. So this trade was a double confluence trade. We have a breakout from a descending trend line, and again we have another trend line breakout again. So in this case, the worst that can happen is you see price return here into 44.45 and trade. The first breakout, look at what it did. After breakout, price traveled a long distance return and left. Now we have another breakout. So you see this channel has been completed and we have a breakout from this descending channel. And I expect that it's either price continues to upswing or comes back to retest it and reject it in a normal fashion like price has done here and swing up. So on technical, you are looking at 2683 into 2674 for the next potential sell opportunity. So manage your risk properly because this is um, this is not just it's not just a marketplace, but a whole lot happens. Idea is to always outsmart small traders. It's a bullish market, so this is what we see. So you see this breakout on this massive bullish candle that got returned yesterday, got rejected here on double confluence. What made it a double confluence? Look at it critically. You will see we have a structure at this level. We have a descending trend line breakout. We have an ascending dynamic support. Ascending dynamic support with a very strong characteristics hold price. Break of a supply roof. When price return broke the demand floor but respected the supply roof. And break of a supply roof, price returns on demand one, on demand two, on demand three, finally bullish uptick. So the worst that can happen is to see price return back here into 48, into 49, and into 46. And you see a swing up, and you're going to get it. So this is how we analyze structure of market. The worst that can happen is to see price return into 50, and at most the worst is 46, and retrace itself back into 81, then sell from there. Then it will now sell down into 64 because 64 was initially a broken roof, it will now become a new demand floor. So officially, SAU enters a complete bullish phase. It has to go that high. It has to go that high. If it goes that high break, then 64 is going to wage the market. 64, 60 will wage it. So if 64, 60 wages it, then it will print a new high. If that doesn't happen, if we cannot do that, and if price gets to this black ascending trend line again and manages to not print a new high from here, then it will start to go bearish. And besides, when you look at the structure, we have a baby structure here. Let's tighten it up. See the baby structure, this is the roof and this is the floor. So technically, if price gets to the roof, which is around 75 level, I expect to see price come down to fulfill the roof, which is around 621. So that's another case scenario. So we also need to look at this from this perspective that if this is the direction market wants to go, because analysis can just be and the market wants to do something different. So we must also factor in cases that market already designed to do something different. So in that case, if that happens, this is the most likely what we will get. This is most likely what we will get. So you can see the structure. So if price decides to play on this structure, if price decides to play on this structure, then you have no choice. And even in a more extreme case, if price is going by the structure, because we started playing this structure from here, this is where we started. This is the first supply, and this is another test to the structure. This is another demand floor. We have another demand floor. We have here as a supply roof. We have here as a demand floor, break up the demand floor, retest one. So if we come back here on a retest two, that will not be a bad idea because it's one line, one rule, one price action. We have here supply roof, break of a supply roof, demand, 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 break of a demand floor, supply roof, supply roof. So on technical, this is valid. Then we can also look at more extreme case because sometimes buying gets extreme. And when there is so much liquidity injection that sell orders might not be triggered, and if you have a scenario like that, such a scenario will be in line with this structure, which comes close to 83 level. So at this level, you see price at 83, 86 level, where you need to manage your risk properly. Risk management is key. So we'll be watching to see how the 4 hours candle close. The 4 hours candle close, 4 hours candle close above 65 level will be watched. If that happens, then we want to see a possible retest, a successful retest into that zone. We actually hold after price narrowly escaped that zone yesterday due to the fundamental data print from United States monetary policy team. I believe that a breakout from that level again will stop the price. So this is how we see SAU. So you can now say that your sell zone will be 2684, let's start 86, 26, 83, and 2674. Last sell setup. Manage your risk. Risk management is key. Good for us.